जमाने के नए हैं रास्ते, लाए हैं कुछ हम सबके वास्ते, सुनेंगे सबके दिल की बात, रहेंगे साथ दिन हो या रात। हम सबके साथ हैं, हम हैं सबके, हम सबके साथ हैं। या व्यापार हो आगे बढ़ाना, जब सबके का हर पल है साथ, तो साथ ही भला क्यों घबराना। लिया हमने अब दिल में ठान, करेंगे पूरे सबके अरमान, नई जिंदगी की है आस, आसमां भी तो है अपने पास, बनाएंगे अब सबको सबल, सुनहरा होगा सबका कल, बुलंद सबके जज्बात है, सबके, हम सबके साथ हैं, हम हैं सबके, हम सबके साथ हैं, हम हैं सबके, हम सबके साथ हैं, हम हैं सबके, हम सबके साथ हैं।
India is a land of diverse cultures, timeless traditions, and rich heritage. Banking and financial inclusion of every individual plays a crucial role in the economic development of the country. However, the sheer, diverse, and expansive landscape poses a challenge for setting up of brick-and-mortar banks and financial institutions in every nook and corner of the country. There was a need to bridge the gap between a potential customer and the bank. SubKLiye in Hindi means for everyone, and in English it means below 1000. The name symbolizes its vision of universal financial inclusion by creating technology-enabled touchpoints within 1000 meters of every household.
What we do, we essentially link banks to last mile customers, the unbanked customers in the regions where banks don't necessarily reach them in a brick and mortar fashion. So they tie up with us and we kind of find the right customer base, acquire those customers, do all the paperwork that's required so that the bank then onboards this customer and provides the services. Whether it is a savings service, whether it is loans or any other payment services, we enable those things by acting as a bridge between the borrower and the lender or saver and the bank.
నేను వ్యవసాయదారుని, నేను ఇక్కడ డబ్బులు వేసుకోవాలన్నా తీసుకోవాలన్నా అనుకూలంగా ఉంది. ఆ బ్యాంకులో వేసి సమయం వృధా చేసుకోకుండా ఇక్కడనే అనుకూలంగా తీసుకొని మా పనులు మేము సాగించుకుంటున్నాం.
The way the model works is that we deploy a fleet of agents on the ground, with typically local retailers who run their own regular shops. We try and convert them to act as or double up as a banker. Effectively, they become human ATMs. We hand out this low-end technology equipment, which is a mobile phone and a small printer, and they sort of then use their own cash, which is generated in their regular business, to be able to provide services to the communities around them. Over a period of time, we also added many products on this platform. We now give out loans in groups of women. We give loans to individual entrepreneurs. We collect savings. We do money transfers. We allow people to withdraw their account balances. So that's kind of how we have built the whole model, which is in a way a model that enables any financial institution.
SubKLiye's feet on the street and technology platform which it developed really helped the bank to go out and expand their operations in these areas. So over the last 5 years, we have grown 100 times. We are well recognized in the banking world. We have a good support from our investor team. We see that confidence keeps on growing. We have recently concluded 2 rounds of investment, and investor confidence is really high on us. All this has happened in a very short while. There is no looking back from here. That's what I feel. We are growing, and we are growing very strong.
SubKLiye has developed software applications that are integrated with core banking systems and work on mobile phones, allowing the users to perform financial transactions in a safe environment, eliminating the need for a traditional brick-and-mortar bank. The future of banking is digital, and SubKLiye is doing its bit in moving India towards a safer, more accessible digital space. With SubKLiye expanding its reach and its ever-growing customer and agent base, we are positive that the company's mission to connect every individual and household to mainstream financial system, thus promoting an inclusive and prosperous economy, standing true to its motto, SubKLiye Samriddhi Laye.
At CreditMantri, we call Chennai home, and most of the team is based here. My co-founders, Gowri, Sudarshan, and I spent many years in banking, and now it is our vision to make CreditMantri India's leading and most inclusive digital credit marketplace.
CreditMantri was a pioneer in providing free credit report and an analysis of it to customers in India.
We use data and technology to help lenders and borrowers make more efficient credit decisions.
Whether you are credit healthy, new to credit, or credit challenged, CreditMantri can help you. Our role is to provide the tools, the education, and the opportunities to make real and meaningful progress.
The work we are doing is important. We have a clear vision. We know we are on to something really big. We are making a difference. Our growth has been phenomenal.
It's tough, and yet it's relaxed. It's both stiff and very, very loose. We are about always seeking great ideas. We're constantly collaborating and working with one another. Nobody has a bad idea. There is no one person with all of the good ideas. It's a casual work atmosphere. No one sits in a cabin. When we are happy, we do it in the open. And when we shout at each other, we also do it in the open.
We are performance driven, and we are constantly discussing production funnels and how to make these more efficient. Our success is hinged on our ability to execute well at all times. We must develop thick skin, and we all work very hard.
Well, for the past few years, it's been more work than life. Hanging out with my kids, the best option is to get them to come over to work late evening or on Saturdays.
I think work and life sort of synthesize with each other. At work, we are a family, and at family, we all work together, and that's how I deal with work life.
We work hard and we try and have fun too. I try and make the people at work my family. It's not work-life balance, but work-life integration. Making this happen is a constant work in progress.
We are here from all over the country. We speak different languages, come from different backgrounds, but we have one goal: make financial progress possible for all who seek our assistance. I don't like the word management style. It's really what I am as a person, given that I spend long hours at work. So I like to be what you see is what you get kind of a person. And I think my team will pretty much agree to that.
I'd like to let people, design and arrive at their own work style, and then I try to do course corrections to them so that they fall on the right track. That's my leadership style.
I instigate, I challenge, and I take no bullshit. People need to be supported and reprimanded at the same time. We are learning every day, and we are cultivating a culture of our own.
The truth is, what I like doing is very different from what I do. So what I like doing is getting up early in the morning, listening to music, exercising, then having a nice breakfast with kids, and then starting out my day early.
I'm a firm believer in prayers. I think prayers give you a certain focus, gives you peace of mind, it makes it easy for you or makes it good for you to think clearly and provides a lot of clarity. I love music, and music clears my mind a lot, and I'm recharged again after listening to a good piece of music to start dealing with other issues. So music and prayers is my mantra for how I deal with things.
I like the outdoors, I like being physically fit, and I like working hard. These are some of the things I'm passionate about.
What we are doing is limitless. We've got to be the best. Be different.
Be relevant.
Make a difference.
We want to help people. We want financial progress for all.
We have grown rapidly in a short period of time, and we are developing a culture that will support the core values at CreditMantri.
Each of us brings something special and unique, and together we will make a difference.
CreditMantri is more than just a free credit score. We are a team, an incredibly smart, dedicated and hardworking group of people who are sharing our capabilities and talents to support our customers.
We are proud of what we have achieved so far. All of us, working together, are poised for great accomplishments.
This is just the beginning.
A very good evening and a warm welcome to all our viewers on Zoom and Facebook Live. We welcome you to the dialogue series of Basics SubKLiye Samvad. We facilitate conversations with social sector innovators, influencers, and integrators. These series are a tribute to late Mr. V. Nagarajan and late Mr. Amit Mehra, founding members of Basics Social Enterprise Group, both stellar personalities who have left behind a legacy and an imprint on the social sector. We thank all of you for taking out time and joining us for what is surely going to be a stimulating and engaging session. This session is being brought to you by SubKLiye, a corporate banking correspondent that offers affordable, accessible, and scalable financial solutions to the underserved communities with high-tech and touch capabilities. Today's session will be a freewheeling chat about Fintech for Inclusion with Mrs. Gowri T. Mukherjee, co-founder of CreditMantri FinServe Private Limited. We will be hosting a question and answer session in the last 10-15 minutes, and we would request all our viewers to post their questions in the chat boxes on Zoom and Facebook Live. Without further delay, I would like to call upon Mr. Sasidhar Thumuluri, CEO and MD of SubKLiye Impact Solutions, and our moderator for today's session on Fintech for Inclusion. Over to you, sir.
Thank you, Tanvi. Thank you so much. And welcome, everyone. Good evening, good afternoon, good morning, depending on where you are signing in from. And thank you for making it and adding value to this humble knowledge sharing endeavor. It is indeed an honor and a great pleasure to introduce our guest today, Gowri Tyagarajan Mukherjee, an exemplary entrepreneur and an accomplished business leader. Gowri co-founded CreditMantri in 2014. You have seen a glimpse of it. We will learn more about it. CreditMantri is a fintech platform which simplifies credit decision-making and facilitates financial access for what they call credit invisibles in India. CreditMantri boasts of a user base of over 20 million consumers. We will know much more about it in a few moments. Gowri is a career banker turned fintech founder. She has over 22 years of experience in digital financial services, spanning payments, product management, and marketing. An alumna of BITS Pilani and IIM Kolkata, Gowri started her career at HSBC with stints in corporate as well as retail banking, followed by SIFI, where she was part of the team that launched State Bank of India's internet banking platform. She moved on to Citibank, where Gowri served as director and head of their digital business in India. Prior to founding CreditMantri, she was global head of digital marketing at Standard Chartered Bank. Gowri was invited by Reserve Bank of India to chair its committee on securing card transactions in India. Gowri and CreditMantri won many awards for their exceptional contributions in fintech and financial inclusion domains. Most recently, she was conferred the pretty prestigious Edward W. Cloggers Award for Leadership and Innovation in Financial Inclusion by Axion International. The topic for today is Fintech for Inclusion. And I can't think of a better person to unpack this subject for us. Thank you, Gowri, for accepting our invitation and sharing your views on this platform.
Thanks, Shashi. Thanks for that.
Thank you. I think it's apt to start with a brief about your journey. What brought you to this stage? I know you switched sides from a career banker to an entrepreneur, a startup founder, and this time that you are in this fintech space. Today we see a lot of buzz around this, but I know when you started off, I think fintech and data-led models were not fully evolved and even much talked about, especially in the inclusion space. So it'll be really a pleasure to hear your story briefly, Gowri.
Sure. So we spent a lot of time in large financial institutions, and the common problem that we used to encounter was if 100 people applied for a loan, less than actually 20 got access to the loan. And the surprising thing used to be that the 20 who got the loan got it from multiple financial institutions. So to us, the big problem was what happens to this 80, which is for the financial institutions, it is wasted marketing dollars in sourcing these applications. And for the end consumer, it was unmet consumer demand. So, to us, this 80 out of 100 problem is what we call as the credit invisibles, who were really invisible to most financial institutions. And we felt that this was a problem that was not being solved for meaningfully by existing financial institutions or by some of the newer players who are beginning to use tech and data. So everybody was focusing on solving for the 20 out of the 100. And we said, if we have to be a financial institution that has to drive credit in a meaningful fashion in the country, which we felt was important to drive inclusion and growth, solving for this 80 out of 100 problem was necessary. And which is really what CreditMantri set out to do. When we peeled it a little and figured, why are these people invisible to financial institutions? There were 3 use cases that emerged as things that were not being addressed. One was a lot of these consumers had a black mark on the bureau. And in the past, with bureaus having become popular in India, lending institutions were taking cognizance of their past delinquency or their past poor repayment behavior and actually rejecting them. And this inability to correct their past behaviors was resulting in them getting excluded out of the formal ecosystem. So that is the solution that we said we need to therefore develop in order to make these consumers come back into the formal ecosystem. The second big reason that we saw was many of these consumers had never borrowed before. And because they had not borrowed before, the typically lending institutions didn't have a method to credit profile them or use have data points to give them a credit product. So we felt that we had to use alternate data to help lenders gain confidence and for the consumer to give the lending institution the comfort about their credibility. So that was really the second use case. And the third use case was there were consumers who there was nothing wrong in the bureau. They had borrowed before. Everything was clean, but their income was actually lower than 20,000 rupees a month. And the unit economics for these consumers who were low income but credit healthy, as well as the new to credit segment was they needed loans in ticket sizes of 50,000 and 25,000 rupees. And the unit economics for sourcing these consumers through most of the traditional channels just didn't add up. So therefore, using data and technology to help these consumers get access to the credit and to get the lending institutions draw comfort about their behavior patterns was something that we felt was the use case we had to solve for. And in order to do this, the starting point was to credit profile the consumer and understand this, what was really where they stood. Did they have a black mark on the bureau? Had they never borrowed before? Were they somebody who was credit healthy but low income? Or were they somebody who was credit healthy and high income? And depending on what we saw of the consumer, make available products and services that brought them into the formal ecosystem. So that was really what we did when we came up with what we wanted to launch. And in order to do this, what we needed was to get access to formal bureau data. And we are not a lender, and we are an intermediary. We don't take credit risk. And if we had to be an intermediary and we had to credit profile the consumer, we needed access to the bureau information. So which meant that we had to convince all the stakeholders, including the bureaus, that giving us access to this data was important to bring financial inclusion and to help consumers understand where they stood. And we were therefore the first player in the country who ended up offering free credit scores and who helped consumers to understand the state of their credit health. And from there on, I think in the last few years, the industry has significantly transformed. A lot more players are offering this as a starting point and as a hook to draw consumers in. But for us, this is really a way to understand the consumer in order to make available products and services that are relevant to this consumer.
Great. So I understand that you have three parts to your business. One is credit advisory, credit correction, and credit building, if I would put it in three formats. Right. So let me get the last one, credit building, wherein the data, maybe some of them may not be available in the credit bureau as well, and maybe even if they are there, insufficient credit is the flag that a lender would get. So how do you work with them? What is it that these customers will have to do to get onto the credit journey? Yeah.
So, on our platform, let me kind of describe how our platform works. So consumers come to our platform. And when consumers come to our platform, we first credit profile this consumer to understand the color of their credit. Are they credit challenged? Are they new to credit? Are they low income but credit healthy? Or like I said, are they credit high income and credit healthy? What we call as red, amber, light green, and dark green consumers. Having understood the customer's color of credit, what we make available is products and services. Now, the products or services from lending institutions, and we work with 50 plus lending institutions, could be the standard products many of these lenders offer, or could be tailor-made products that we have specifically created with some of these institutions where we felt that the demand was not being met by any of the standard products that were being made available. So what it means is that if we find that somebody is new to credit, or somebody is even credit challenged, or somebody is low income credit healthy but is seeking fresh credit, we try to understand this consumer better, which is at that stage, we start asking the consumer to give us incremental consent in order for us to get access to transactional data. It could be their bank data. So what we look at data in three buckets. We look at data which is institutional data, could be from the bank or the bureau, could be user declared data, could be data from SMS, could be data from their app and behavior on consumers' platforms. And the third kind of data that we look at is data sources which are statutory in nature, could be PAN, GST, Aadhaar. So data from each of these sources obviously carries different degrees of weightage and has to be read differently. Data from all of these data sources is put together in a common framework in terms of assessing the individual's credibility, which is really what we call as the ASCII pillar, which is ability, stability, contactability, intent, and ID. And having looked at each of the customer with the lens of the ASCII pillar, we've actually worked with the lending institutions to make available products, which are nothing but SKUs on our platform, which could either be, like I said, the standard products that they offer, or could be custom products which are only available on our platform, where variables outside of the credit bureau, looking at the bank data and transaction behavior, looking at statutory data, becomes available to the consumer.
Interesting. So, so your customer segments may range from anyone of any income level. That's not critical. It's important is to help them get into a credit journey more sort of sustainably in some sense, right? So who pays for this service? Is the customer who is taking the advice pays for it, or the lender pays for it? Who pays for your service, and how does it work? What is the revenue?
Got it. So I think the way it works actually is that the consumers come to our platform, and what we offer is a free credit health check. It is a draw for consumers to come and understand where they stand.
Once consumer has understood where they stand and we've kind of looked at the color of the consumer's credit, like are they red, amber, green, we make available products and services. So our revenue model comes from 3 revenue streams. One is consumers subscribe to specific services. It could be a credit improvement and a resolution service for customers who have a black mark on the bureau. It could be a ways to reduce their EMI service for customers who are credit healthy but want to reduce their borrowing costs. Could be a credit health monitoring service, or could be a credit builder service where they want to build their score. So customers, there's a subscription revenue stream. There is a new credit revenue streams where lenders pay us when we source a customer according to the policy that we have discussed and pre-agreed with the lender. And the third revenue stream is the resolution revenue stream, where a delinquent customer, when he repays the loan, the lender pays us a fee. So we look at revenue in 3 broad legs. There's a subscription leg, there is a new credit leg, and there's a recovery leg. So those are the 3 revenue models.
Fantastic. So, but how does a customer know about this platform? So what is your go-to-market, strategy? How do you go and reach out? And then what is the methodology of working with the customer? Because it's a platform, right? I thought it's all digital.
Right.
So is there a physical connection that you make, or is it all digital? How do you travel this journey with the customer? Can you just unpack the operating model a little bit?
Sure. So I think which is really, so for us, the exciting part is, the product solves for the customer, or what the customer needs, irrespective of the color of the consumer's credit. So it's like we have built a product platform that theoretically solves for the 100. But what we are really cherry picking on, because the problem if we have to solve for the 80 out of the 100, which is a credit invisible, is really looking at consumers who've been rejected for a loan, is really looking at consumers who are not getting access to the credit. So a specific focus for us is to work with consumers who are the credit invisible, so who are lower income, who are struggling to get access to credit, who have been rejected for a loan. And for that, we do a combination of things. So our marketing programs and our go-to-market is driven by directly advertising digitally, and that's really how we got started. Over a period of time, we find that there are a lot of players who are getting applications that are getting rejected. I could be an NBFC, I could be a fintech lender. I'm sourcing 100,000 applications a month. I'm not able to process anything beyond, but I want to send the customers that I'm rejecting onto a platform which is able to give them access to something so that they're able to solve and get into the formal ecosystem. So we are able to source from partners who are not able to process applications. We are able to source from lenders who find that they have a black mark with a lot of customers and the customer has not repaid them. And we work with these customers to help them understand why this black mark is impacting them. So it could be data that is, consumers who are sent to our platform through any of these sources. And, the opportunity that we really see is, can we work with some of a lot of these BC networks? Can we work with, because having created this engine, we feel that now is the right time for us to scale this up into a model which also is able to put together consumers who are not necessarily coming all through the digital sources, but also require some aid in order to bring them to a platform like us.
Yeah, so that is where I am also trying to get, in the sense that not every credit challenged or credit excluded customer is necessarily on a digital sort of a platform, or perhaps the access to digital is limited.
Right.
Is it necessary that the customer has to be digitally included before they are financially included in this journey, or is not required? I mean, you can start working with them to get onto digital space, or is that a prerequisite in this?
It's not a prerequisite, but it is required for us to get the consumer's consent in order to actually work with the consumer. So some amount of digital savviness. So there are 2 things that are required that we find that are necessary for us to offer a meaningful service to the consumer. A, the customer is banked, that he at least has one bank account that the consumer is working with. And 2, the customer has access to a mobile phone and some form of data service so that they can give us consent in order to pull data for us to actually deliver the service. Once both of this is established, our ability to deliver the service through an aided channel, like an assisted, a telephone assisted channel, or, for the relatively, we do this multilingually as well, or it could be done through a voice bot on our own website. is something that we are able to cater to. But a requirement is really that the customer has enough access to be able to consent, formally on our platform, is able to punch in an OTP, is able to give us consent is a requirement.
Fair enough. So coming to the alternate channels, non-digital channels, agent networks, I think are quite an obvious choice as now, as you see there, when one can sort of count on them for various financial access. So in that particular format, a customer walks in, and most of the customers the agent networks serve are, very financially light. If we don't, they're not financially excluded because they might be walking in for some service, but definitely not included enough. So how do you think this synergy will work? What do you think an agent can do to help them initiate the journey on CreditMantri platform?
So I think the way, with the agent networks that we see this panning out is if the agent is meeting the customer, the agent is able to walk the customer through saying, look, whether you're looking to apply for a loan right now or even later, why don't you credit profile and see where you stand? So I would call it like a simple health check sort of thing to see that there's obviously nothing wrong immediately. But if there is an opportunity for the agent to get the customer to be open to the fact that a credit health or a customer understanding the status of their credit health is important. So what typically happens is when the agent meets the customer, the agent punches in some information about the customer, basic details like mobile number, etc., which in turn, a link is sent to the end consumer. The consumer clicks on that link, gives the consent. And then logically from there on, the processes take over where once we are able to see the customer's credit profile, we then push the customer to have a conversation with us to say, this is the status of your credit health. We see that there are 2 negatives in the bureau. Would you like to resolve them? Or you've never borrowed before. Are you looking to apply for a loan? Or from what you have, this is the vintage of your borrowings. This is really how much is unsecured, secured. This looks efficient, inefficient. So the first level of credit profiling is something that we feel to source this consumer and to grant the consent in order for understanding and therefore the customer right product, right service fit is really, I think, a significant role an agent network can play in terms of driving this. Because once the consumer is aware, they make better choices. They make better choices in terms of being aware of what kind of credit products they are eligible for, what they are not eligible for. If there's a black mark on the bureau, how long is it going to take for them to correct? A lot of times people probably have a marriage that's coming up or a son who is to be sent to college, but if they have a black mark in the bureau, they're not going to get access to a personal loan so easily. So in situations like that, it requires some period to have this course correction done, and which is really why doing this in a proactive fashion will be very useful for consumers, particularly in the 15,000 to 25,000 rupee income ranges, where even if they realize that there is a problem, their ability to course correct is not instant. It requires a combination of products. For instance, one of the things we have is we then, if the customer's intent is genuine in order to correct, and we are able to look at data which convinces about the intent, we then make available debt consolidation products so that he can repay the delinquent loan and then take a fresh loan and then start afresh with a clean bureau history. So things like that, which take a period of time to correct, allows the consumer a period of time to correct an error that was done in the past. And for a vulnerable segment, for whom disposable savings are not so easily available, this could take an extended period of time, and therefore knowing about it upfront would be very, very important.
I think. In fact, the value that can be offered is immense, because a lot of people don't know how to assess their own credit, eligibility, if you want to put it that way. But do we require these touch points, the agents, to be able to interpret credit reports and explain to the customers effectively? Do we need these agents to be credit advisors, or are they going to only capture the data and then everything else happens in some kind of intelligent engine?
I think the way our system works is that the role of the agent is to bring the customer through the door, because the way it gets delivered can be tricky, because if given the nature of it has to be factual, it has to be something that is not driven, and the training becomes very, very important. And therefore, to that extent, our model is quite centralized in the sense it helps the customer visually see where they stand. We do this in 5 different languages because what we find is consumers like to hear in local language. So it could be Telugu, it could be Tamil, it could be Hindi, it could be Kannada. But what we also find is that visually, they're a lot more comfortable when the data is presented to them and they're able to see it for themselves rather than somebody just translating it for them. So this combination, when the customer is able to see where they actually stand, also brings a lot of credibility to the consumer that, this is what my score looks like. I actually have 2 delinquencies. And a lot of times it helps the customer to recollect. Most consumers know that they had a past delinquency that they've not cleaned, repaid. And it helps them to kind of say, oh, this has actually been recorded, so I must do something about it. Or in the case of a customer who's never borrowed before, or the customer who's low income credit healthy, they see a lot of ads which talk about 10% rates and 9% rates. And therefore, when they actually look for a product and their expectation is when they apply for these products, they're not getting access to it. When they actually do it for themselves and see, they're able to validate saying, though my criteria makes me eligible for only these kind of products with this kind of rates. And when data is seen and by the customer and presented to the customer, they actually make better choices.
Fantastic. So in this bracket of 15 to let's say 50,000 kind of a range, the whole among our audience, I think there are lots of people who practice microfinance and a lot of BCs would be listening in. So do you also work with microfinance networks, or do you intend to do that? Because that is a large network as well as BC network that reaches out to the really low income consumers who one thing is may require to offer alternate data to be able to assess their overall credit profile, or someone who don't understand the value of the credit score may have to be right. So they both are there in that segment. So do you envisage a microfinance industry benefiting from the products that you are offering?
Yeah, I think to be honest, Sashi, we started off with imagining the customer as somebody who is earning anything about 12,000 rupees, right? That becomes the starting point in terms of new credit products becoming available. Now, with the microfinance bureaus having gotten strengthened and the bureau data on from microfinance institutions coming in, what we are actually seeing is that this becomes a good way for the end consumer to understand actually what is the status of their loan in each of their, the group borrowings that they've also done. So for us, it's a segment that we have not necessarily focused on, but we are happy to kind of pilot or work. We have not partnered with a microfinance institution per se, but this is something that we would be more than happy to work with, because this is one use case that has been intriguing us in terms of saying, now that the bureau data on the microfinance institution side has got strengthened, why don't we make this platform available for that segment as well? So the use case that we right now solve for and work with some agent networks on is for consumers earning more than 12,000 rupees, and the retail bureau is the starting point of the credit profiling from where the data gets built on. But one active use case with the bureaus as well that we are looking at is to say, can I bring in the microfinance bureau data as well, and to give an integrated view for certain consumer slivers?
Yeah, see, I think it is definitely something worth exploring, because especially microfinance institutions that are trying to break out of the group and mono product models, and of course SFBs, small finance banks, very clearly are in that space, and banks who are trying to downstream and already have got enough space covered in microfinance areas through BCs or through other channels, and BCs who are also restricted in terms of offering mostly liability and payment products, not so much of credit. So there is a gap that everyone faces. Either credit is too restricted to one product, group lending model, or BC model is restricted to payments and related products. So do you think there is a scope for innovation while they access a platform of your kind? Now, does it inform the lender typically banks, to be able to think more than what we currently offer through these networks? Is there a scope for graduating these customers to more relevant and meaningful credit products? I mean, you are more focused on credit. So is that something that you see possible?
Absolutely. And the reason I say this is because when consumers, particularly in the lower income segments, come in, a lot of times the hypothesis is around what kind of credit product to make available, because the standard products of most lending institutions are cookie cutter, right? And the policies are written with a certain product construct. When one is able to see the demand, and that's really how we built the product construct on our platform for the 15 to 25K income, where we found that if there are standard SKUs on our platform, there's a demand coming in from a certain segment which none of the products from the 50 plus lenders were addressing, which is what allowed us to create a product specifically for individuals earning 12,000 to 20,000 rupees, launch of the 25,000 rupee score builder product or the 50,000 rupee personal loan using the alternate data. And this was the demand supply gap, and convincing lenders saying, here is the demand, I'm seeing it on my platform. Let us create a solution jointly. Let us do a test program where we cap the program, see how it scales up before you open it up. Gives the lender also a lot more comfort in both in terms of understanding this segment and scaling this segment. So in my mind, I think there is absolutely scope for innovation, because once data on the demand and the data of the texture in the demand, what are these consumers like, where are the pockets, where are they coming from, makes it then a pretty targeted solutioning that can be effective.
Yeah, I think it's worth trying some of these ideas with some of the potential partnerships that may reach out to you. On the data protection and privacy side of it, since you are also kind of asking for alternate information, alternate data, how do you ensure that these customers are educated well enough, and also that their data is safe for them to give away and trust? So I think that's a subject of concern all the way from regulator to customer. How do you take care of that challenge?
Sure. See, I think the way we saw, and this has been an evolution session. So, 5 years back, nobody was worried so much about the data. The kind of people who were worried about the data were really the people who were high income, credit healthy, who were also aware, and for whom they had choice available, where they knew that they didn't really need alternate data to establish their credibility, because the bureau data in itself is sufficient. Nobody, the bureau data would carry them through in terms of whatever programs that lending institutions were offering. Our premise has always been data when collected has to be consented, and data and we act on behalf of the consumer. While our revenue streams can be from new credit or from repayments coming from the lender, the reason we exist is because consumers come to our platform, they trust us, and they give us consent to access their data. So how we store the data, how we use the data, and how we share it with financial institutions has always got to be consented. And so without consumer consenting to share data with an institution, we don't do that. Secondly, we only gather data when we find that the data that's available with us is insufficient to get the customer into the platform. Because if we are able to look at bureau data and make a credit product available, whether it's a standard credit product or a specialized product we've created, it is we do not ask the customer for incremental data. We ask the customer for incremental data only when we find that I'm not able to work or help this customer get access to credit with whatever limited data I have. So can I get access to their statements? Can I get access to their SMS data, which will allow me to establish credibility with the lending institution? So the purpose is really to see, can I help this customer to get access to a product where I can leverage data to get access to the product, and not see it as I want to use the data and then take a call. I think it's a very different mindset in terms of how one collects the data and how one works with the data.
Yeah, and see, this period where we are right now, last year or so, completely through everyone off the cards, right? From credit history perspective, one of the things that is affecting every financial institution today. So is there is there a role that you are playing or planning to play in terms of helping consumers who are, already kind of in stress? Not only in stress because people don't even understand how the moratorium really works and when they can pay, when they can't pay. So is there a product or a program that I think you have a play in this particular market where so much of customers are in credit stress situation. How do you see your role helping some of these customers coming out of that?
Absolutely. I think in the last 1 year has been something that, has, kind of put how we work with the consumers at serious test, in the sense that the series of changes, starting point was the moratorium. Explaining to customers, saying, what is the moratorium? Should they take the moratorium? Should they actually continue paying? Handholding them, educating them through the process. Second is, if they have not repaid or if they're having challenges, coming up and presenting restructuring options to them, which allows them to transparently see what is going to happen when a tenor gets extended. Visually be able to see what happens if I break it into smaller installments and pay. And the solutions for this varies depending on whether I'm in the 0 to 180-day bucket or whether I'm in the NPA bucket already. And third is making available products from institutions which are sensing that these customers need help, but are yet willing to work with these consumers and give them access to credit, because they fundamentally are able to see for themselves that these are customers who had a short-term struggle, and therefore getting them back into the ecosystem is important. So one of the things we're working on is coming up with specialized products, which is new credit being given to these risky segments that have fallen off, and trying to see how we can get them out of the debt trap. Because we're seeing segments which are actually quite, particularly in the 0 to 180-day, where people are taking multiple loans and have got into a debt trap, and they're moving from loan A to loan B to loan C. And they're servicing all three of them, which then over a period of time just eats into any disposable income that they have. And simply, how do we make available a credit product which is able to consolidate it and make it more efficient for them? Or for consumers who are deep delinquent, how do you help them to a 180 plus? And therefore, how do you give them access to a loan which allows them to repay this delinquent loan and get back into this, the formal ecosystem? I think those are all products or simply work with the lending institutions to say that I'm an NPA customer. Can I break this repayment into smaller installments, and somebody keeps track of this schedule with these consumers? Each of these use cases, we actually have solutions for them, and we've worked on some of these. The last 1 year has been very, in our product journey, a lot of focus has gone into how we work with the consumer who's credit challenged, because a lot of the new credit that was earlier available to the new to credit or the low income credit healthy segments have gotten tightened. And a lot of focus has gone into saying, how do I help these customers to resolve and restructure?
Yeah, very critical. And I think next 6 months to 1 year will be also so important for many of these customers to understand the value and come back into track. One last question, and your video and also what we heard intrigued as on terms of the work culture, the innovation environment that you have created. I think a lot of startups would like to learn about how, can you please talk a little bit about how the innovation happens in CreditMantri? How is it managed? What kind of a culture it is?
I think we're a small team, and so there is a lot of brainstorming that happens on use cases that we're seeing in the market. A lot of solutions that we end up offering or coming up with are what we see happening on our platform. And this could be either driven by insights from our data science team saying demand, supply, where are the gaps? Or it could be service issues that are coming up saying there is a customer who wants to repay, is delinquent. They've seen that they're delinquent on the platform, and we're seeing that many of these customers we're not able to offer solutions. So a lot of innovation stems from what we are seeing live on our platform and how quickly we are able to work with institutions across whatever services that we offer in order to find a solution for the problems that we see. And that really forms the starting point of what we look to solve for. Once the problem gets identified, the solution, I think we have a very strong team, who understands financial services well, who are quite strong on the tech side. where we're able to kind of architect and find a solution that we're able to deliver in an efficient manner.
Yeah, much to learn there, and look forward to more to learn from that front. Let me move to the audience. I think there are a few questions that are floating here. So first question that came in is about are you developing scorecards? I think they're saying startups. I don't know whether you are addressing institutions and in this platform. And they're also talking about FPOs and collectives, right? So are you also working on those areas as well?
So what we do is, we work with data. And while we have an internal, like I said, we have a 5-pillar approach of ability, ASCII as we call it: ability, stability, contactability, intent, and ID. For us, data from any source is pulled into a variable to assess a customer's ability to repay, or his stability, or her intent, or her contactability, or her ID. And therefore, putting a scorecard is something most lending in, or a rating or a score is eventual outcome. But the heart of what we do is, and which is really the hardest part of working with data from federated sources, is to put it into a common framework in order for it to get parsed and read in a consistent manner. Once that's put in place, the scorecard is an automatic derivative depending on the credit institution that wants to lend. And whether it's a score, or it's a scorecard, or whether it's a set of rules, or it's driven by AI or ML, the variables and the data variables form the heart of how this gets processed. So while we do score the customer, we have our own lendability, sloppy payment score. That is all that happens in the background. And it's more a tool for us to say what customer needs, what service. The heart of how the credit gets delivered is how the lending institution and the policy we are able to work with the institution.
So which means that it is not just individuals, but you also may work with small businesses and institutions. Okay.
Yes.
So that's much wider case use cases that you can come up with. I think there is one comment saying that NPAs seem to be higher in rural markets. I don't know which studies are being referred to. Benny Katta is saying, and they're saying I think the point that he's driving is that in rural markets, social collateral is used as a alternative to physical collateral securities. Is there a model within CreditMantri that looks at those aspects as well, or is it primarily the data that is only going to inform you? Is there any social aspects that you capture?
See, to be honest, actually, the starting point of our, as part of our credit profiling, was to get a sense of the social capital. It didn't necessarily take off, because we are a platform which likes to look at data and to make sense of how data is able to inform our decision making. Some of the SMS data, some of the GST data gives us a sense of width of this customer and how they are able to work with other people. But to a large extent, when we started, the construct was, if I got references from 20 people who were already there in our network, all of that went into our model. But we found that the prevalence of it and the acceptability of this to lending institutions was not widespread. And we felt that probably looking at social capital and references as a way to underwrite was something that lending institutions, because we don't take risks, we work with intermediaries, we are an intermediary, were not necessarily ready to. And even if we had the data, solutioning for it was not possible, because no lending institution felt comfortable based on certain references, because they felt the system could get cheated. So what we said was, let's keep that aside. It's a question of time. But personally, I feel that's a very, very important marker. And that is how, to a large extent, credit has been driven. And if we really have to scale it to these segments, measuring, and triangulating these ref checks with multiple data points will be a strong way to bring it into the ecosystem. We are happy to partner with, I think as we scale our model of building it out through, some of these agent partners we are hoping to build out with, I'm hoping that some of these use cases would get solution for.
Wonderful. There's an interesting question from Pooja who says, how do you measure the intent of customers? How do you quantify the intent? I'll just add to it also say that how do you also know whether there is no over-indebtedness to the customer? Because customers' intent can be often lead to greed also. So how do you do that?
So I think there are a couple of simple marks. I think lending institutions have done it for a long period of time. You see, so for us, intent, obviously from the bureau, there is a lot of data that establishes intent, how they've repaid, have they had clean closures, are they being a sloppy payer? So bureau is very rich with information. Now what happens if the bureau data is insufficient? And that has really been the breaking point of how do I use alternate data to establish intent? The way we see it is intent is a function of, so some of the variables that we see are positive drivers to intent is the consumer credit hungry? So are they, when are they applying for the loan? How many times have they applied for a loan? The other thing is, is there responsible behavior that they are demonstrating outside of, if they've never borrowed before, outside of credit, which is, am I paying bills on time? Am I actually, when does my balance zeroize in my account? Do I have insurance policies that I've taken, though I'm less than 30 years of age? So there are certain markers to responsible behaviors that we find are useful in establishing intent. Then on our own platform, we find that there are intent drivers. For instance, how much time customer spends in understanding the status of their credit health. Is the customer actually willing to subscribe to a specific product or a service that helps them to improve their score? That again is a marker of intent. So I think the intent variables can be looked at with multiple layers with the alternate data when the bureau data is shallow.
Interesting. There is one question about agents identification, but I think you are still beginning to work on that model. So I believe we can skip that for now. There's an interesting question on consent, right? Is this an informed consent? How do you manage consent with the customers that may not be fully aware of these things?
It has to be a physical consent in the sense that it has to be informed and the customer has to explicitly consent and punch in an OTP. And that is deemed as consent. So there is no question of a checkbox which allows us to work with the consumer. It has to be that the consumer comes to our platform, specifically authenticates themselves before we are able to make available the products and service. So in our minds, it has to be an informed consent. That's number one. And number two, with agents, I think it's early days for us. Happy to work, on ideas around the agent model. It's an area of big focus for us. So if there's anybody who, is interested in a reach out to ping me.
I'm sure you will get some leads here. One last question before we close. We want to close on time. This is an interesting question. Did you do any analysis of the recommended cases from your platform versus what is their repayment behavior? So is your correlation between your score versus the repayment behavior post the correction of the credit history? You have any comments on that?
Yes, that's what we do on an ongoing basis. So I think what we are recommending is not a secret sauce, in the sense, what we are really saying is, if somebody has a write-off on the bureau and the score is going to keep dropping, right? So we are saying resolve that issue so that the score drop gets fixed. It's common sense, right? We are not delivering a secret, or if there is a settled loan, the score is already dropped. And the customer does not get access to a loan because nobody is going to lend to a settled customer in the past, particularly a recent settled. So what we do is really to figure out solutions that allows for the customer to repay this past indebtedness and to do it in a manner which is structured. So which is really the interesting use case of combining breaking down a large amount of repayment into smaller amounts where the intersection of payments and credit becomes relevant. And that's really what we solve for. So it's not a secret sauce. It is really a straightforward resolution of what was a past issue.
Yeah, so I think we need to close at 7 p.m., but there are some more questions flowing in. I'm sure some of them may reach out to you also for some clarifications, but Gowri, fantastic, really great learning opportunity and new business model that I myself learned about. I know you've been big and doing a lot of this stuff, but directly talking and learning has its own value. And I'm sure all our audience, 150 of them here and similar number in the Facebook, all of them I think have got a great understanding of what you've been doing so far. Thank you so much for your valuable time and sharing your views so candidly. And look forward to connecting more again.
Thank
Thanks
you.
everyone for your participation. Over to you, Tanvi.
Actually, Sashi, thanks so much for the opportunity. Really appreciate it.
Pleasure, pleasure.
Thank you very much, Gowri ma'am, for this insightful and innovative session. And thank you everyone for joining us today. And we hope this session has been helpful in shedding some light on how technology is enabling opportunities to bring in universal financial inclusion. Don't forget to follow all our social media handles, the links of which are in the chat box, and to get updates on the next session of Samvad. Good evening.